So, as you guys know, Nvidia stock has, of course, been on an absolute tear in recent years, but their most recent earnings reported this past week sent the stock falling by close to 20%. That's almost a fifth of its entire value being wiped off the board. So, naturally, the question becomes, is this a dip worth buying into? Well, that's what we're going to talk about in today's video. I'll share my thoughts on the earnings report, the stock valuation, and where I think they're heading long term, as well as what I plan to do myself as a very large Nvidia shareholder. It's one of my biggest stocks in my personal portfolio. So without wasting any time, guys, let's just go ahead and jump straight into this. Now, pulling up the stock chart here, we can see that just in the past week alone, it's fallen by about 19%. So right away, we can assume, right, that earnings must have been horrendous. There's got to be some really bad, like jaw-dropping negative results because, of course, Nvidia is so popular. It's a beloved stock. Everyone wants to own it. Demand for AI is through the roof this year. So for the stock to tank like that, losing about a fifth of its entire value, earnings just got to be really bad, right? Like really, really bad. Well, yeah, that's correct. Earnings were horrendous. Some of the worst I've actually ever seen, guys. In fact, take a look at this. Sales, they barely rose by only 122%. Are you kidding me? Over $30 billion in sales, and all you could manage to do was just more than double them in size. Are you going out of business or something? That is terrible results. And oh man, if you think that's bad, their profits were even worse, with net income only rising by a bit more at 168% growth. That's it. That's so bad, guys. I think we should just start to short this stock with everything we've got because Nvidia is clearly going out of business. Okay, all jokes aside, those numbers were obviously incredibly strong. So what could possibly be bringing down the stock? It's got to be that they missed analyst expectations, right? I mean, we see that happen all the time as stock rises a lot. So analysts expect perfection. They expect too much growth from a company, even one that is doubling their sales and profits like Nvidia, but they expect even more than that. And then it gets to a point where a company just can't quite meet those expectations. So that's got to be what's happening here, right? Well, not only is that not what's happening here, but in fact, in each of the past 4 quarters in a row, Nvidia literally beat expectations on both the top and bottom line, despite the incredible performance that they've been putting up. So there is almost nothing to complain about here. The company is doing incredibly well. In fact, during the earnings call, they even said that demand for their products continues to be higher than they can even supply, which they also expect to continue into next year as well, while also giving higher guidance than analysts were expecting to, at least according to CNBC. Speaking of which, one analyst, a bullish one, noted that Nvidia is literally shipping out everything that they can sell right now. So they're essentially performing at their very best. This is like peak Nvidia that we're talking about here. And yet again, the stock actually fell by a very large amount. So why could that possibly be happening? Well, our best guess is that it had to do with their margins slightly dropping compared to the prior quarter at a time when the stock price is already just up by so incredibly much that it is kind of priced to perfection at this point, which, to be fair, that stock price is up over 2,200% in just the past 5 years alone. So it is very expensive, but I'll come back to that in just a second when we talk about the valuation. When looking at their gross margin, though, it fell from 78% in the prior quarter down to 75% in this one too. But two things on that. First of all, 75% is still incredibly strong, but more importantly, we're only comparing this to the prior quarter as opposed to the more reasonable comparison, which would be the prior year, in which case their margins actually improved from 70% the year before and 43% 2 years before. Now, that's a giant improvement, obviously, and that's what should really be the focus here instead of these, dumb little quarter by quarter comparisons that really only short-term traders and greedy investors and traders are probably going to be caring about. Now, in terms of whether the stock is a buy on this dip, of course, as always, do whatever you want, make your own decisions. But for me, in terms of my opinion, if we look at their valuation and we look at their future potential, I'll break all of this down for you guys, but my overall kind of general opinion on this is that, yeah, if this was a stock that I did not already own any shares of, I would be a buyer here. And even owning some, I'm still a buyer on big dips like this, because when we look at the valuation, and you can just see how the explosive growth actually leaves the stock still pretty attractively valued. So, for example, their trailing PE ratio is 114% more expensive than the sector median. That's obviously very high. But forward PE, it drops down to 64% higher. Again, still very high, but it improves. And then if we go forward even more, their PEG ratio is actually 42% cheaper than the sector. That's wild for the market leader. While all ratios are also 20 to 50% lower than their own 5-year average as well. So what does all of that mean? Well, it means that even though Nvidia is a very highly valued company, there's no debating that. I think right now it's like the third largest in the entire world. It's a very expensive stock and company, right? But even though they carry that rich valuation, what this shows is that they're actually growing into that valuation because of their unbelievable earnings growth coming from the insane demand that they have for their products because of the rise of AI and many other things. And I just don't think that that's something that we're going to see really slow down in a dramatic way anytime soon. It is possible that it slows down a little, but not in such a giant way, because most analysts really agree that these markets that Nvidia is serving right now are going to be worth really trillions in the future. Of course, there's AI, but also cloud computing, cybersecurity, gaming, autonomous driving, the metaverse, the Internet of Things, smart cities. I think that'll be huge. But there's just a lot overall going on here. And Nvidia will be powering much of it. The majority of it will be powered by Nvidia. And because there's so much rising competition within those markets, by Nvidia's customers, other companies, with everyone trying to be first, or at least trying to make sure that they can compete and not fall too far behind. Well, the result is that even though they're investing so heavily into these areas, they actually can't really afford to slow down, because the risk of falling behind the competition is much greater. And you don't have to take my word for it. We've actually seen many big tech CEOs speak out about that, like with Google and Meta, for example, saying that the risk of spending too little and falling behind is an even greater risk than overspending right now. And Mark Zuckerberg, for example, was quoted in saying that they need to keep aggressively spending in these areas, because the downside of being behind is that you're out of position for like the most important technology for the next 10 to 15 years. Nvidia CEO also commented on this during the recent earnings call this past week, saying that the people investing in Nvidia's infrastructure are getting returns from it right away, noting that the next generation AI models will require 10, 20, and even 40 times more computing power, which is similar to what former Google's CEO Eric Schmidt had to say as well recently too. Now, this was also in reference to something that Nvidia said in the prior quarter, where they gave data points showing that a cloud provider could actually make $5 just from selling access to $1 of Nvidia chips. In other words, companies will pour a lot of money into Nvidia products, but they will get a big return on those investments. And in my opinion, that's what's going to kind of continue to cause this like snowball effect that's been going on for Nvidia to keep on rolling, keeping the demand for their products up so high, which again, we're already seeing the effects of. In fact, in each of the past 4 quarters in a row, Nvidia saw triple-digit revenue growth, while profits have soared by even more. So it's by all accounts a company that is just on fire right now. Now, does that mean that the stock is really safe and that it's a screaming buy? No, of course not. It's not going to be, the third highest valued company without taking on some considerable risk because of that. And it's also a very newcomer at that. I mean, it's a stock that recently shot up by a gigantic amount in recent years. So that alone makes it a target, I feel, for short selling and other negative pressures, and just kind of a lot of volatility overall. In fact, over the past 2 years, the stock has moved 5% or more in a single day on 50 different occasions. By comparison, other big tech giants that have been in the trillionaires club much longer have seen much more stable performance, like Meta, Microsoft, and Apple, who only had that happen to them 21 times, 6 times, and 5 times respectively. Tesla, of course, being known for heavy swings, though, with also a similar kind of meteoric rise in recent years, right? Well, they had that happen to them 70 times. So you can kind of see the similarities there. But, my point is that you can probably expect to see a lot of volatility with Nvidia going forward, and there will be times where the stock sinks even on amazing earnings, just like they just had, because because it is kind of priced to perfection. So that's kind of the downside risk to it. But in my opinion, looking at it again from a very long-term perspective, I think out into many years into the future, even decades if possible. I just think that over that time, if I look back on all the dips, I think they'll ultimately have been buying opportunities. So I'm a general buyer of Nvidia stock whenever it does dip at all. And hey, it also helps to know a bit that Nvidia actually believes in their own future too, having just announced another $50 billion stock buyback program, despite being at record highs in the stock price when that was decided on. So anyway, I'm bullish on it. I'd love to hear what you all have to say about this down below in the comment section. Do you own Nvidia? Are you thinking about it? Is it a stock you're staying clear away from? Let me know. I'd love to hear your thoughts. All opinions are welcome. Thanks again for stopping by, my friends. Thank you for all your support. Hope you're all doing well, and I'll catch you in the next video. All right, take care, everybody. Bye-bye.